Get ready for the action because Qualcomm stock is surging. We are diving deep into why this smartphone chip giant is making massive moves in the AI world. We're talking about a top hyperscaler making plans for first deliveries of Qualcomm's custom chips later this year. And we will break down exactly what this means for the future of AI hardware and what investors are really thinking about this huge opportunity.
Stop using your finger for notes, sketches, and edits. This Jam Jake stylus pen gives your iPad a smoother, more precise writing feel with palm rejection so your hand can rest naturally on the screen. It charges fast, works for hours, and comes with replacement tips. Perfect for school, work, or creative projects. Check the link in the comments to grab it on Amazon.
Next up, we are looking at how Qualcomm is tackling market concerns by recalibrating its chipsets to mitigate worries about rising phone prices. Discover the specific changes Qualcomm is making to its chip architecture and how this strategic move is designed to keep devices accessible while still pushing cutting-edge performance for consumers. Now, let's talk valuation. We're dissecting the intense debate around Qualcomm's stock, exploring whether it's truly overvalued or if fundamental analysis points to significant value. We'll compare discounted cash flow models against current P/E ratios to uncover the hidden story behind this volatile stock movement. Finally, we examine the key drivers pushing Qualcomm higher, including new Snapdragon platforms and partnerships with OpenAI. We'll wrap up with what analysts are saying and what to watch for at the upcoming Investor Day 2026. Stay with us, because this is the future of mobile computing. Qualcomm stock experienced a significant surge, climbing $21.36 to close at $213.93 on Thursday, marking an approximate 11% increase. This rally reflects renewed investor interest in Qualcomm's potential as a lower-priced entry point into the artificial intelligence hardware market. The stock peaked near $223.58, pushing the company's market capitalization close to $229 billion. The catalyst for this renewed interest stems from a major development. A top hyperscaler, a large cloud provider purchasing hardware in bulk, is slated to receive the first deliveries of Qualcomm's custom chips later this year. This disclosure has become a central topic in valuation discussions. Analysts are debating the company's future trajectory. Harsh Chauhan of The Motley Fool suggested that while Qualcomm's reliance on smartphones has lagged behind other chip stocks, its AI inference chips, those essential for running trained AI models, could unlock new growth avenues. Conversely, 24/7 Wallcent expressed skepticism, noting that Qualcomm trades at approximately 16 times forward earnings with a free cash flow yield of 6.52%, contrasting sharply with steeper valuations seen for competitors like Nvidia, Broadcom, and AMD, suggesting investors are still viewing it as a legacy modem maker rather than an AI silicon player. Simply Wallcent adopted a more cautious stance, questioning whether the stock has fully priced in expected growth, referencing a fair value argument of $300 per share while highlighting risks associated with modest revenue growth and softer net income projections. Qualcomm's recent financial figures show mixed signals. Fiscal Q2 revenue reached $10.6 billion with non-GAAP EPS at $2.65. The company highlighted strong performance in its automotive and IoT segments, reporting record QCT automotive revenue and a 20% increase in combined automotive plus IoT revenue, alongside a $5.4 billion share buyback program for the first half of fiscal 2026. CEO Cristiano Amon emphasized engagement with the large hyperscaler customer and detailed plans for multi-generation chip offerings, including CPUs, accelerators, and custom ASICs tailored for specific workloads. Competitive dynamics are intensifying. While Nvidia maintains its dominance in AI chips, AMD's recent guidance spurred a broader surge in semiconductor stocks, with the Philadelphia Semiconductor Index hitting a new high and Qualcomm rising 1.6% on Wednesday. Analysts note that Qualcomm is expanding its data center lineup, suggesting a maturation in its strategy, though the handset segment remains a significant concern. Projections for the current quarter's handset revenue fell short of Wall Street expectations, compounded by challenges from pricier memory chips and Apple's potential development of proprietary modem chips. J.P. Morgan analysts are blunt, stating that the smartphone sector is hardly out of the woods. The June 24 Investor Day is poised to be a critical inflection point. For the stock's valuation gap to narrow, Qualcomm must provide concrete evidence, including customer names, revenue figures, and proof that its automotive and data center chips can offset handset volatility. Without this, the recent rally is viewed by some as speculative trading on a business that is only beginning to substantiate its growth narrative. Qualcomm is reportedly recalibrating its chipsets in a strategic move aimed at mitigating growing concerns over increasing smartphone prices. This adjustment suggests a proactive response by the technology giant to address market pressures and consumer affordability issues. Industry analysts are closely watching this development, as chipset pricing is a critical factor influencing the final cost of mobile devices. The recalibration effort is expected to impact various product lines and could signal a shift in Qualcomm's pricing strategy to maintain competitiveness in a tightening economic climate. Further details regarding the scope and timeline of these adjustments are anticipated as the situation evolves. Qualcomm, following a recent 55% monthly surge, is facing mixed signals regarding its current valuation, prompting analysts to reevaluate its prospects. A discounted cash flow, or DCF, model estimates Qualcomm's intrinsic value at approximately $155.60 per share, suggesting the stock is currently overvalued by 23.8% based on these projections. However, a comparison using price-to-earnings, PE ratios, presents a different perspective. Qualcomm currently trades at a PE of 20.45x, which is below the broader semiconductor industry average of 53.66x and the peer group average of 75.04x. Furthermore, a proprietary fair ratio estimate of 28.51x suggests the stock is undervalued on this metric. To provide a more nuanced view, the analysis introduces qualitative narratives for Qualcomm. A bull case narrative projects a fair value of $300 per share, implying a 35.98% undervaluation compared to the last closing price of $192.57, based on a projected 20.08% revenue growth. Conversely, a bear case narrative estimates a fair value of $168.50 per share, suggesting a 14.29% premium over the last close, supported by a lower projected revenue growth rate of 3.14%. These different scenarios highlight the complexity of valuing the stock. The report emphasizes that investors can utilize these narratives to align with their own outlook, allowing for a dynamic assessment of the stock's potential. The analysis is based on historical data and analyst forecasts, and it is not intended as financial advice. Qualcomm Inc. Stock surged by 3.68% on May 7, driven by a strategic pivot into the artificial intelligence sector and the launch of new product lines. The positive movement saw Qualcomm outperform the technology equipment sector, which rose by 0.22%. In the sector, NVIDIA Corp led the turnover with a 2.43% gain, while Micron Technology Inc. rose by 0.36%, contrasting with a decline for SanDisk Corporation, which fell 3.55%. The primary catalyst for the stock's rally was the announcement of new Snapdragon mobile platforms, specifically the Snapdragon 6 Gen 5 and Snapdragon 4 Gen 5. These chips are engineered for mid-range and entry-level smartphones, integrating advanced features such as AI-powered camera capabilities, superior gaming performance, and Wi-Fi 7 connectivity, successfully expanding Qualcomm's reach into value-focused segments and emerging markets. This positive sentiment is bolstered by recent strong financial results. Qualcomm reported robust Q2 fiscal 2026 earnings, exceeding consensus estimates for both revenue and earnings per share. Crucially, Subsequent disclosure of a custom AI silicon deal with a major hyperscaler has significantly elevated investor confidence, signaling a major entry into the data center AI market with anticipated shipments later this year. Further strengthening the long-term outlook is the reported partnership with OpenAI to develop an AI-native smartphone chip, slated for a 2028 launch. This underscores Qualcomm's commitment to leading the next generation of devices centered on AI agents, reinforcing its AI everywhere strategy across mobile, automotive, and PC platforms. Analyst sentiment is also shifting, with several firms upgrading ratings and price targets, recognizing Qualcomm's current valuation relative to its AI competitors. Anticipation is high ahead of the Investor Day 2026 in June, where the company is set to detail its data center and physical AI roadmaps, fueling expectations for a potential stock repricing. Technically, the stock displayed a MACD value of 7.75, suggesting a buy signal, although the RSI at 80.08 indicates an overbought condition. Qualcomm currently ranks fifth in the technology equipment industry by annual revenue at $44.28 billion.